done well. Advanced decline should come up on your screen next as well. The market breadth should be positive in the session today. It's a bit of a yawning gap, if you will, not a very large yawn, but still opening up nevertheless. So metals, like I said, Metallica today. So you see Tata Steel, JSPL, SAIL are amongst the stocks that are doing really well for themselves. MNC stocks are actually a bit weak. Maybe ABB's commentary and Honeywell's results have both impacted the street sentiment, but GVT&D is participating as well. So that one is down about 3%. Results impact being seen in Narayan Rudalaya, which is down about 7-8%, if I'm not wrong, 5% now. But MCX is actually having an uptick too after, while the margins were below estimates, but still an expansion, and maybe that's why the stock is doing well. Results impact also seen on Sarda Energy, which could qualify as the stock of the day, but Netweb and Delivery are not too far behind. But 17% for Sarda Energy is no mean feat. Lastly, I call this a delayed uptick because all of these stocks reacted very differently in Friday's session and are now moving up today. So UPL up 7% today. JSW Energy up about 5% after correcting in Friday's session, as also Capri Global. I think the positive commentary came in Thursday late night, but stock is moving up about 8% today. Okay, let's go across to Jay Bala for a quick thought before we get to what dealing groups are recommending in the session today. Jay, thanks so much for joining in. 5 weeks of a downtick. Is this just a dead cat bounce, you reckon? Or is this a start of the return after 5 weeks of a downtick?
Hi, it's good to be here. Thanks for having me on the show. It's neither. It's a man in between. See, the overall trend that started from the April low, that still remains. The market has been on a very, what we call in elite way parlance as an irregular correction. And that's the reason why it looks, it's taken so much time to consolidate and slightly bearishly. If the markets were to take out 24,955 on a closing basis, I think the bottom is already in. I've been projecting an important support at 24,400. The market has come very close to that. The low of yesterday was, or the low of Friday was somewhere about 24,550. And today's low has come about 20 points close to that. So the market is trying to find support. I would rather have the market go very close to the 24,400 support and then reverse from here. So to your pointed question, this is neither a dead cat bounce nor, I think it's a matter of time before the market starts to trend aggressively to the higher side. But we have to have short-term patience. The market needs to do a little more, possibly to the downside, and then it'll surprise a lot of people to the upside.
Okay. And Jeb, can we first get your ideas going? How are you? What are the recommendations for the afternoon today?
Yeah, I have two picks for today. One is Netweb, which is doing quite well today. And this stock it comes at a little bit of risk from the fact that it's got a limited price history. And it's reasonably liquid, not excessively liquid. So you need to allocate sensibly there. But the price structure is, the quality of the price structure is nothing to compromise. It's classic, possibly heading to all-time highs around 3,100. The stop loss is about 1810. The second pick is Cipla. The risk here comes from Donald Trump's whims. You know, he can change his mind about tariffs, and there is a price breakout of the stock. There's an inverse head and shoulders breakout for Cipla, and the stock is pulling back into the breakout zone. So it presents a low-risk entry point with a stop loss of 1454 and possibly heading to 1711.
Got it. Okay. Okay, well noted, Jay. Thanks for those ideas. Stay on. Maybe you want to have thoughts on some of these conversations that are coming in from the dealing rooms, and Somit Sarkar Johnson for our signature segment, which is the chatter from the dealing room. What is being heard on the street? Somit, good afternoon. Interesting afternoon, considering it's very different from what the world markets did on Friday. What are you hearing on the dealing rooms?
Well, multiple stocks that remain in focus. Firstly, it's NCC and Jindal Stainless, and dealers are indicating that large HNIs are taking a pair trade here out of the Q1 numbers. For Jindal Stainless, it's a buy call, and for NCC, it's a sell call. For DLF, dealers are indicating that there are some sell flows at higher levels on anticipation of a weak pre-sales number. For Paytm, dealers are indicating that there are positional sell flows being taken by multiple dealing rooms as on anticipation of the fact that the stock might not get included in the MSCI index as against the earlier expectation of the stock getting included in the MSCI index, and the announcement will be out on August 8th. For IOL chemicals, dealers are indicating that smart and prominent investors have been accumulating this counter in trade today, so keep an eye out for that counter. And lastly, when it comes to Magellanic Cloud, now we don't talk about this stock quite often, but there's a buzz on the street that there might be an announcement from the company's side on of a potential acquisition that they might do in the US market. So keep an eye out for that counter as well.
And sorry, just wondering, I don't know, I have never heard of this stock as well. Is it a very small company, and can they be making a large acquisition? Why is this coming in the realms?
So it's around 4,800 crore market cap company, and yes, the acquisition could be a bit bigger for them, significant for them.
Significant for them. Okay, very interesting. Okay, Sumit, thanks for putting this into perspective. Well, a clutch of names out there which are interesting. Now, Jay, I would love to know, AB Capital has actually surged in trade today as well and trading close to today's highs. So a view on that, and a view on two stocks on which there are some sell flows, DLF as well as Paytm. What do you make of those two?
Yeah, as a sector, I'm quite bullish on the real estate space, and DLF is set to embark on the next leg of the move. But the stock has had a good run up. But while I'm bullish, the allocations has to be sensible here. I'm expecting DLF to cross the all-time high sometime in the next 6 to 8 weeks. When it comes to Aditya Birla Capital, the recent high was about 280 and change, and the price structure from the pullback to the low of about 250 or 245 has been a corrective price structure. So the basic underlying point is that the stock is likely to take out the high past 280 and hit somewhere close to 300.
Okay. Watch out for Paytm as well. Positional sell flows are seen at higher levels out there, so keep that one in mind too. AB Capital, Jindal Stainless, NCC are some of the others. Okay, a set of stocks which have had it rough today are these MNC stocks, and particularly ABB India. So Sumit, while you are with us, over 5% down in trade today after the numbers and the commentary. Street seems to be a bit disappointed. What have you made of these numbers?
Well, as the numbers were quite below compared to what the street was estimating. If you look at the EBITDA number, that was 24% down on a YOY basis. Margins came in 600 basis points lower compared to what the company reported last year, while the net profit number that was down around 20% on a YOY basis. Now, what impacted ABB in the second quarter of calendar year 2025? Well, it was a double whammy both on order inflows and on margins. And margins were impacted because of higher raw material costs and other expenses. If you look at the company's gross margin, that stood at close to 38.2%, which is the lowest that we have seen in the last 6 quarters. Now, even if you adjust for the forex loss, then margins came in lower than what the street was expecting at around 14%. Now, apart from that, if you look at the order inflow number, that came in at around 3,000 crore rupees, which is down nearly 12% on a YOY basis. Now, do remember when the ABB global numbers came in, the street was in disbelief and was expecting the order inflow for ABB to be on the stronger side, but that has not come in the second quarter, and hence this a sharper downtick that we are seeing for ABB. Even if you look at the outstanding order book, that stands at around 10,600, which is just 0.8 times his last 12 months sales. So not quite a strong outlook as well, or not strong revenue growth even visible when it comes to ABB. Apart from that, on the conference call, the management also said specifically that they are seeing significant delays when it comes to decision making. However, on the positive side, they did say that they have not seen a significant reduction when it comes to the order pipeline, but it is the delay that has been impacting the company's order inflow, and they're expecting a gradual pickup in order inflows in the second half of this calendar year, but that remains to be seen. When it comes to pricing, they clearly said that they're facing headwinds on price realization, particularly in the motor segment due to heightened competition and weaker demand. And they're also saying that there has been heightened competition from the Chinese players as well in automation segment and heavy industries, because and that has also been impacting the financials. So overall, a weak set of numbers, not that optimistic outlook as well. They're expecting some order inflows or order to pick up in the second half, but it will be a wait and watch mode, at least for ABB as of now.
Okay. Samit, thanks so much for that. In fact, we spoke to the management earlier today and asked them about the concerns over the tariff uncertainty and more. Listen in.
Whenever there is uncertainty in the market, naturally there is a bit of a concern, and that concern flows and flows to the market and also starts reflecting on the amount of traction the customers have in their segment. So see, we have our customers who are the end users in the country. We also have machinery builders who are exporting to different countries. So what happens is when you look into that mix, there is a general slowdown till the market air gets cleared. So I believe, given we have seen how the tariff negotiations had taken place between different countries and the country in question, I believe it's a matter of time India will also find its own settlement and that air should clear.
So some pain in ABB coming in there. Look at a Thermax also about 6% down, seeing a bit of pain today. JP Power not doing too well. PNB Housing had seen a spike through the day but has reversed once again. Their management woes continue possibly. So that has been, seeing some weakness. So is Narayana Hrudayalaya, and we'll get a piece up for you on Narayana Hrudayalaya as well. That's been a weak set of numbers. Siddharth Khemka joining in and speaking with us this afternoon. He's Head of Research Wealth Management at Motilal Oswal Financial Services. Siddharth, a very good afternoon to you. Just in terms of earnings as a factor or earnings as a trigger for companies, do you see the overall trend being a bit on the negative side?
Yeah, good afternoon, Tamanna, good afternoon, Neeraj, and good afternoon to everyone. So I think, yes, that in this current environment, with a lot of factors or triggers are missing or are already being factored in, I think results are playing a key factor in driving stock prices, especially on the negative side. Wherever we are seeing the negative surprise for second or third consecutive quarter, while the stock prices have already baked in the anticipated growth, I think that is where the big disappointment is coming in, be it some of the retail names, for example, the likes of Trent, or we saw some of the capital good name, again, some of the defense name, where the earnings have not been catching up with the expectations. And the price has been already factoring in a lot of growth. So I think that is a key factor that we are seeing. On the flip side, if you look at the FMCG sector, where earnings growth recovery is clearly visible, and again, the market positioning has been, you can say, very less and not that. The numbers were not that strong in the estimates. That is a sector where even the institutional holding is very less, and that is where a lot of interest is getting generated.
Okay, what would you pick in that space? Did you like ITC? Are you feeling some kind of comfort there with an ITC? Marico will also report now.
So I think clearly, if you look at among the large caps, HCL is something that we felt that is doing much better compared to what the street was expecting, and that is something a positive surprise that we saw. And even after the stock price consolidating, or you can say underperforming for a very long time, I think valuations looks attractive. ITC, I think, is a mixed bag. The cigarette volume growth, I think, was pretty much ahead of expectation, and that is the silver lining in ITC's number. But as a pack, I think the consumption recovery theme should play out with the interest rates, with the monsoon, and with the local flavor picking up in this global volatility. I think this entire pack should do well next couple of quarters.
Okay. In fact, Jay Bala, let me take that question to you. What out of these would you actually look at, would you bet on in terms of FMCG players?
Actually, I'm very uncomfortable with most of the FMCG names, barring a few. There is a possibility that the FMCG names like HUL, Britannia, Nestle, they have clocked medium to long-term tops. I hope I'm wrong, but there are oases within this pocket. Something like Marico and Bajaj Consumer, they are all outliers within the space. So the larger cap FMCG names are to be avoided. I'm not bearish, and I was bearish, but I'm neutral now. But if you want to be within this sector, you got to choose very wisely, because none of the FMCG names that are the frontline names that were bearish have turned bullish since September 2024. So, I'll be very selective choosing within the sector. And as I said, Marico and Bajaj Consumer are the names I will go for. This will be stocks like that I'll be looking for within this space.
Sorry, which one will you buy? I didn't catch that. Which one would you buy?
It is a very reluctant buy, and that will be Bajaj Consumer. I've been bullish on Bajaj Consumer for some time. I turned bullish around the 175, 180 mark, and it's moved from 175 to 250. So that's the reason for reluctance. But I think it might still be an unfinished move from the April low. So there is possible residual bullishness pending in Bajaj Consumer, given the fact that you should have turned bullish at 180 odds level. The risk rewards are slightly skewed now.
In fact, just on FMCG, Neeraj, because I had this conversation with Neelkant today, Neelkant Mishra. I asked him about whether the urban consumption pain is behind us, and that's what we're seeing. And he seems to think that what you're seeing in FMCG right now is a 2 max 3-quarter phenomenon. You're going to
the pain or the pleasure?
The pleasure. You're going to go back to seeing some of those consumption numbers slide after another 3 quarters. So some base effect coming in there perhaps, and also that right now where we are, then the move on staples is getting higher. If distress in the economy comes down, FMCG will be back where it was, is what he seems to say. In fact, we'll try and pull that bite up for you in a bit from now, but interesting take there on FMCG from Neelkant Mishra as well. But we should talk about the stock of the day, and this is something that you had picked up this morning in your wish list.
Yeah, it's crazy numbers, really good numbers actually. Stellar first quarter, and I believe when Vansh said the slug in the morning, he spoke about how the power segment has done well. So he joins in right now with the fine print and more details on the key levers for growth. Vansh, take it away.
Right, so yes, the stock is up 17%. Now this is on the back of the strong Q1 numbers that the company has reported. Now if you look at the revenue for the company is up 76% at rupees 1600 odd crores versus 920 odd crores. So if we'll talk about the net profit, now net profit for the company is almost more than double, and it stands at 434 odd crores versus 199 odd crores. And then the growth, now the major growth has been led by the operational efficiencies for the company, as it has displayed by the EBITDA. The EBITDA stands at 617 odd crores versus 261 odd crores. And the margins, if we talk about the margins, the company has reported the highest ever margins, at least in the last 12 quarters. The margin for the company stands at 38% versus 28% in the year-on-year basis. Now, if we talk about the details, the strong growth has been led by the power segment in the company, and the energy segment has emerged as a growth engine for the company. So, if we talk about the thermal captive power sales, it is up 77% sequentially, and the thermal IPP sales have been up 13% sequentially for the company, and the hydropower sales has been up 434% sequentially for the company. And if we talk about the metal segment posted a steady performance despite the lower realizations coming in, and it saw stable volume growth. And also the company has approved raising of funds of about 1,000 crore for expanding their capacity. So this is what the overall picture is looking like for Sarda Energy.
Okay. Sarda Energy there in focus. Siddharth, is this something that is on your radar at all?
Oh, unfortunately, Tamanna, we don't track this stock, so we'll not be able to comment.
Yeah, okay. Jed, do you track it?
I don't track it, but I had a look at it this morning because of the price action.
Right.
And I think it's still got one final leg of the move that started from the pandemic low, possibly heading to something like 720. But fresh entries at the current levels doesn't present a great risk reward, but reasonable risk reward. So bear that in mind. The stop loss comes at about 390. That's quite wide. So from a price of 516 to 720 and a stop loss of 390 doesn't make enormous sense to me.
Okay, so if somebody was invested, Jay, would you reckon it's good
Definitely
to book profits?
No, definitely a hold. And there is little more, definitely some residual profits to be taken. And the momentum is in the very short term is quite strong. So they can trail with a stop loss at about 430. I'm pretty sure it's going to cross the fresh 51 clock fresh 52-week highs, and it may be somewhere about 620 to 720.
Got it. Okay. Some other stocks that are flying around, Ather Energy, and should pull that one up for you. It's really zooming in trade. In fact, up probably hitting the all-time highs. Yep, look at that spike there on Ather. So really smart move there. There is some gains for Kalyan Jewellers from the lows of the day. So 574 was the low of the day. And I think Kalyan Jewellers has bounced quite dramatically. It's in fact a trending move currently at the highest point of the day. So good move for that one too. Delivery at about, well, hitting 52-week highs, up about 7% if I'm not wrong. 6.85% at the high point of the day. Some really strong movers there. I wonder if you track fundamentally delivery, Siddharth Khemka, and what did you make of the numbers and the outlook that they have presented?
So thankfully we do cover delivery. It's a recent addition to our coverage, and we have been liking this name. Some of the new age businesses in that sense. So in terms of earnings, I think the company looks positioned for a scalable growth. It's looking to improve margins as well as benefiting from the network synergies. So definitely, if you look at the net profit, came in strong at 911 million rupees, up 53%, which was supported by margin expansion as well as disciplined cost management. I think what we feel is that despite being a seasonally weak quarter, delivery reported a strong Q1, and there was a robust volume growth with improvement in EBITDA margins as well as the improved outlook. We feel the company is positioned to report strong numbers. So what we are expecting is a 14% revenue CAGR, but with margin improvement, a 38% EBITDA CAGR and 53% PAT CAGR over the next 3 years. So over FY28, and we believe that the business is positioned for strong, especially if you look at the core transportation business, clear focus on the express parcel delivery, which the company expects to sustain a 16 to 18% margins over the next 2 years. And hence we believe the stock could do well. We have a target price of rupees 500 currently based on a DCF calculation.
Okay, thank you for that, Siddharth. And in terms of the entire consumption space, just listening to what Neelkant Mishra says, FMCG seem to have positively surprised everyone, but is there a recovery inside that could sustain? Listen in.
See, for a very large part of India's economy, food is a very important part of the basket, the consumption basket. We tend to think that higher agri prices are great for the rural economy or the poor, but that's absolutely not true. So out of the 22-23 crore people who call themselves engaged in farming, about 10-11 crore people are landless workers on farms. Of the 11-12 crore people who have land, only 3 to 4 crore people have marketable surpluses. So most of the farmers are subsistence farmers. Basically, they don't have surplus food coming out of their land parcels, so they actually have to work on non-farming jobs as well to supplement their income. So if food prices fall, for a very large part of the economy, it opens up space to consume other goods. And therefore, I'm not surprised that FMCG volumes have actually recovered. I think it's a 1 or 2, maybe 3-quarter phenomenon. After that, I would expect it to taper down. The phase of economic development that we are going through, labor is in surplus. Labor will be in surplus for quite a while. Capital will be in shortage. So labor will not have the pricing power, and therefore real wage growth is likely to be constrained. The only way to improve the quality of, or at least the pace at which real wages rise, is by getting the economy to grow faster. So therefore, removing supply constraints is something that becomes very critical.
My birthday gift to पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज़ हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की ज़रूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशित आई, ऐसे बॉय मिलते मुंबई में, चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Welcome back. You're watching India Market Close, and onto the segment where we give you the pros and cons of buzzing stock of the day. Today it's delivery. Will it keep delivering strong growth numbers, and what do you make of the numbers? And both sides of the coin is important, Harsh.
Well, yes, some positives, some negatives, and let's try and have a more balanced view because frankly, everything that I was reading pointed to the bull case, and it was tough to bring out a bear case on a day like this. Express Parcel business has seen a very, very strong Q1. And that is evident in the numbers itself. So that makes it an easy bull case. But you need to wait and watch for sustainability. This is a business which has had its fair share of headwinds, and there is also the platforms which are building their own delivery systems, and therefore you want to wait and watch for sustainability on this one. So that's the case with regard to Express Parcel. Ecom Express volume retention has come in higher, which is a key positive again for that part of the business. But does that mean all of the integration and execution risks are gone away just because of one quarter of that? Maybe not. You want to wait and watch whether top management gets retained, managers get retained, and the business itself can integrate well with the current business of delivery. Third piece is with regard to what Macquarie is saying. They're seeing an upside on the services margin guidance of 16 to 18%. Mind you, this is a business where the margins have fallen from 18% to sub 16%, has now recovered an inch just above the 16% mark. You want to wait and watch for that to happen. So that's my bear case. Last off, most brokerages have hiked target price, but stock is up 85% in the last 5 months alone. Analyst recommendations, 19 buy calls, 3 holds, 3 sell, and the upside being just 3%. That's what really stands out for me.
Wow. Okay. Okay. Thanks a lot for that, Harsh, and some pretty stellar moves there for delivery as well. Keep an eye out for that stock. We spoke about it on the charts, of course, fundamentally too. Some sense given on delivery. Okay, on to more corporate news and just a brief peek into this. VinFast, the Vietnamese EV maker, has launched India's largest showroom in Chennai, marking a bold EV expansion, choosing India as a hub for pan-Asia activity. We spoke to the CEO of the company, the CEO of Asia business of the company, to understand the future outlook in the plan to ride the EV way in the domestic market. Listen into a small slice of that conversation. Can you enumerate your plans for us? What we know is that you're making this investment for a plant in Thoothukudi in Tamil Nadu. Can you tell us a bit more about this?
Thank you very much for having me on this call. So we are very delighted and excited to be able to open our first plant outside Vietnam in India, Thoothukudi. This is a very historical milestone in our entry into India strategy. So this plan is about 50,000 units per year, and we are going to scale it up very soon, depending on the response of the market for the time being. And we would like very much to, increase the localizations on the spot. We bring in more local investors, and we try to set up what we call the local supply chains here in Thoothukudi itself. We have two models we launched today. It's model VF7 and model VF6. And we are very happy that this model will have received a very warm reception in India. And we are going to launch it, launch the price, launch the features very recently in a couple of days in August.
Got it. Mr. Chow, what is the strategy behind doing this in India? I know that it's a large market, but I'm guessing from whatever little I read of your plans, you are planning to use India as a hub, a manufacturing hub for other markets as well. Is that right?
Yes. India has been identified as one of our strategic market. Why it is strategic market? Because it's very big. It's huge, and it has potential to grow, especially for EV. That's number one. Number two, when we open our plant in India, we target not only India itself, we target the whole South Asia. We target the Middle East and Africa for the drive-hand drive countries. So after sending our car to customer in India, we start exporting. We are very happy that today we have some customer coming from Sri Lanka, Nepal, Mauritius, who would like to place the first order from our factory. So definitely this is going to be the export hub for India.
Okay. What's the extent of the investment that you are going to make, Mr. Chow? Because I heard you say that you're starting off with 50,000 vehicles per annum, but you plan to scale it up rather quickly, is what I heard you say.
Yeah, we plan to, this first phase is 50,000 units, right? And we are going to upscale it to 150,000 units in a later stage.
Okay, so the total investment, which starts off with maybe about $500 million, if I'm not wrong, scales up to what, $1.5 to $2 billion over a period of time?
Yeah, correct. We started with the first stage of 4,000 crore, and then our commitment to invest in the long term in this region is 60,000 crore.
All right, going across now to a live press conference of Bharti Airtel. The company has launched X-Telify, its digital arm to accelerate digital transformation. Listen in.
They decide to be, let's say, on Google. I don't know which cloud they're using, by the way. Then that SaaS application will be on Google. On the other hand, if they have their own private cloud, on their own Singapore cloud, can also go onto that cloud. So this can be ported into any cloud. These are SaaS applications, as you rightly said. And then underlying that, you need a cloud. You need a cloud stack. That cloud stack in India is Airtel Cloud for Indian customers. But the SaaS side is a global play.
Got it. And so because you have been working on this for some time, so has there been any sort of a cost advantages for Airtel itself?
Yeah.
When you have kind of what you said about data engine, that that's one place where you that's a secret sauce that you have.
Yeah.
So put together everything, has there been sort of a cost optimization, saving?
Well, I'll give you a piece of statistic. And I mentioned that earlier. If you look at our costs, our technology costs, right, as a percentage of revenue, that is in very, very low single digits. It's sub 2%, right, as a percentage of revenue. If you compare that with most operators around the world, they vary between 6 to 12%. So the fact is that we have done something here which has been able to drive a tremendous level of inefficiency and efficiency. And by the way, you must also understand, we're talking about 360 million customers. It's not a small country. We're talking about 250 petabytes of data. So at that scale, to drive that cost down to a bone and yet be able to build a resilient infrastructure, drive industry-beating ARPUs, drive greater personalization, greater bundling across different lines of business. That's really what, most companies, when you talk to them, they look at it and say, we want to hear more.
Got it. Just one last bit, that the data center, as one of my colleagues asked this question, that will Nextra also be housed under this? And overall,
Nextra is a separate company.
Will be a separate. Is a separate company.
It's a separate.
And where does this sit? I mean, will this be under Airtel Business?
Under Bharti Airtel.
Okay.
As a legal entity, it's under Bharti Airtel.
And within Airtel, this will be a part of Airtel Business?
It gets consolidated within Airtel Business, yes.
Thank you.
Hi. Here. Ajit Jha from UNI. I just wanted to know, you said that it will be free of cost right now. So when do you plan to start charging for this, and what kind of revenue?
Charging for what?
Charging for this cloud service.
No, cloud we will sell. We're not going to. Okay. I only said the cloud analyzer we will offer free of cost in order for them to analyze their. This terminology in the cloud parlance is called FinOps, financial operations, where basically you take a bill, you look at the bill, you break it down through the model that we have. Customer obviously many times don't understand the bill because it's 100 pages of complex stuff. I mean, you should see one of the cloud bills and then you will be surprised. And we put it into you just convert into any PDF file, upload it, and it'll tell you exactly what your spend is and what you could potentially save. That capability we've offered free of cost. So not the cloud. No.
It will be chargeable in the future. So what kind of, will it be chargeable in the future?
Which? The FinOps?
In this service, FinOps.
The cloud analyzer is free.
Okay. And what kind of...
All right, cloud services coming in. Interesting strategy that Airtel is looking at. They launched Perplexity Pro as a part of their package recently, now launching these cloud services as well. Let's talk about 2% odd. Let me just get a view from G. Chokalingam, who's joining in on our conversation this afternoon, for what he makes of it. He's, of course, founder and MD of Economics Research. Choka, very good afternoon to you. We were just listening in to the Airtel Cloud launch in the press conference there, talking about this as a service for business that they are putting into place. Is this the direction telecom companies now need to take to add those value-on services which are not otherwise available?
Yeah, certainly. These kind of value-added services would maintain the growth momentum. And industry tailwinds are there already. There are only two players. Third player is struggling and losing the market share consistently. And Bharti Airtel is one of the two companies to continuously gain. So to maintain the momentum in that market share gain and absolute growth, I think these kind of value-added services would help Airtel in a big way.
Okay. In fact, let me ask Jaya Bala about Airtel as well on the charts.
Yeah, the stock has been quite strong and it's been a relentless move from last 2023 December, in fact, and it's gone from 800 to 1900. It's in a late stage of its up move, but the stock is still bullish. Some more higher highs to come through, but not too much of upside. So while it is bullish, I would say it's exceedingly bullish. It's an investment case. Probably it falls within the realm of a trader. So traders bet now. So bullish for the very short term.
Okay, stocks that are really flying now. Look at Hiromoto. Some serious moves there as we speak, and currently trading at the highest point of the day. And that's a beautiful trending chart really for Hiromoto. So keep that stock in mind. There's some strength in J Corp, and I think that one, after ages, I'm seeing this time come amongst the list of high-flying stocks. But that sharp up move there in that stock is interesting. GMR Power is the other one, which has had a very strong move and currently trending higher. If I'm not wrong, this one too is inching higher and currently trading at the high point of the day. So pretty strong moves there as well. Jay, any of these three on the charts for you?
I definitely like auto names, and in particular, I like Hero Motors. In fact, I was keeping this for BTST call, and this stock is looking like it's got potential to at least scale about 5,200 to 5,300 in the short term. And we'll leave it. If auto index were to break out above the July high, I think this might have more potential. And so possibly hitting testing the October highs. So the best out of those names is Hero Motors for me.
Got it. Okay. Mr. Chokalingam, very quickly, just before we get to yet another story, very quickly, Hero MotoCorp, 5% higher. Any thoughts here?
It's a good stock. Traditional players are gaining market share, EV also. And the stock also beaten down quite a lot. So at current price, I think it's a good stock to buy for medium to long term.
Good stock to buy for the medium to the long term. Okay. And more news and updates, Tamanna. And this one is a stormy story.
Yeah, it's a stormy story, and you're seeing an impact on the group stocks as well. So it's an update on the Anil Ambani fraud case. The Enforcement Directorate has termed the 17,000 crore loan fraud linked to Anil Ambani group companies as one of the biggest it has ever probed. Shrimi joining us with more details.
Yeah, that's true. ED has sought, comprehensive details from at least 12 to 13 banks, right from loan sanctioning process to its dispersal to Anil Ambani group of companies. In fact, some of these banks are both, private and public sector banks, including State Bank of India, UCO Bank, Punjab and Sindh Bank, and private banks like HDFC, ICICI Bank, Axis Bank, and as well as Yes Bank, which has been under scanner in this particular case. Now, in a comprehensive details which ED sought at this point, right from the timeline of default of all those loans given to Anil Ambani group of companies and what recovery action have been taken by these banks when the loan turned into NPAs, because most of the loan have been turned into non-performing asset, and the concern being raised from the enforcement agency that why no complaint have been raised and criminal complaint have been filed in this particular case. And taking cues from that, in fact, we are getting indications, Shanshi, that if they are not satisfied with the response, they are going to summon all these top executives of these bankers. They will try to understand that why they have not taken the timely action in this particular case, and then perhaps more questioning will follow, because they are also holding these banks accountable for the huge loan. We are talking about 17,000 crore of loan fraud, which currently ED is investigating. So clearly they are going to sought explanation on that, and they are going to question all these bankers. And as we have been reporting that out of 17,000 crore loan, which is under scanner, over 12,000 crore of loan owed by Reliance Commercial Finance as well as Home Finance, while the remaining around 4,000 odd crore is being due at the other companies of Reliance Group of Companies. So clearly ahead of Anil Ambani's summon to ED, because he's supposed to be present at ED headquarters tomorrow, he has to face some tough questions.
So a couple of things can happen from what we understand, and this will be interesting to watch. Anil Ambani can ask for an extension for the appearance. That is a legal tool that he has. We haven't heard that there has been a request for an extension yet. That can take place 3 times. So if he does go in and submit to the questioning tomorrow, then we have to see how that all pans out.
Should be, from a corporate angle perspective, a very important story too, from a markets perspective as well, simply because, even from a micro perspective, stocks of some of those group companies had really flared up. If you look at this year's chart, you will see some fairly high gyrations and some fairly positive moves for a really long time. Now, this chart doesn't quite show it. It's down 5% because it's an intraday chart. But if you look at this year's chart or 1 month chart, you will see a really sharp spike up.
No, it's kind of wiped out, yeah.
Now it's coming. Now you can see that.
Now it has.
The peak and trough.
Yeah, it seemed like there was going to be a recovery mode taking place, and then this has really come in as bad news. Now, the other thing to remember is that the companies keep sending out notices to the exchange saying that Anil Ambani has nothing to do with us, he's not on the board. So don't react to all of this news. That's a different case altogether. Having said that, G. Chokalingam, how would you look at a clutch of these stocks?
I maintain a universe of stocks to evaluate, and this doesn't qualify. Normally, I avoid the companies which have a stressed balance sheet, And also, if there is any allegation, I try to avoid them.
Clearly, a lot of people are doing the same thing, Mr. Chokalingam. Don't even trust me. Look at the way the stocks have faltered today. So some bit of stress for sure. Okay, the comeback kid for today's session has to be IT. You could argue metals are the best performing stocks, and maybe that is true. But IT stocks and the IT index with 1.6% higher is really making a strong move. Now, Mr. Chokalingam, you like to buy fear, you like to buy value. Is there value or fear in IT that you would want to buy?
I don't have fear, but only if Mr. Trump touches India's IT service exports in some form and disrupt, then it will be a big risk. But as of now, we don't see any sign. And definitely, I like a stock like Cyient. I find great value. Personally, I do not own, but I think Cyient is one such a great value stock within the IT space.
Okay, Jay, today, I mean, the two global facing sectors, right? Metals and IT, but IT in particular, what a big move today, considering what it has done in the last 30 days. So is this the start of a resumption of an up move, or is this a bounce that you would want to sell into?
I want it to be a start of a big bounce, because if you look at the longer time frame for Nifty IT index, it's at a do or die point. I've been calling the move from the April low for the IT as a counter trend bounce, and I projected levels about 38,000 to 40,000. It's come to 39,500, and this pullback is at an ideal point if it has to reverse from here and make a big move. If it fails, it's got very serious consequences, which I don't want it to happen. So, TCS in particular has at least one more sequence of lower low to come through. If it does that, it can put in a bottom. But Nifty IT is more skewed towards Infosys, and that's the reason why it's finding support here at today's low. 34,200 is extremely important for the Nifty IT index. I want it to go past 39,500. It saw in July. Then it gets quite bullish. So it's a more a want than what is actually seen on the charts. So I'll wait and watch for a few days as to what Nifty IT does.
Any individual IT companies that you would pick up? What about an LTI Mindtree with the news on PAN 2.0?
Yeah, LTI Mindtree and Infosys and Tech Mahindra are relatively better off stocks within the space. But I would, these are the places. If Nifty IT index are going to turn, these three names are the ones to watch. And Infosys in particular has got a very interesting price structure. But it's in cross currents with the medium-term, long-term structure. So that's the reason why it's a wait and watch for me. The longer-term structure is saying a bearish possibility. The short-term structure is saying it has to turn from here and turn bullish. So it will be a wait and watch, and I'll be a bit more patient before committing any capital towards the Nifty IT industry.
J. Chokalingam, what about you? Anything in the IT pack that's fancying you?
Certainly, yes. As I mentioned already, Cyient. Apart from that, I like a lot Oracle Financial Software. It's a product company. Very interestingly, only 27% of the revenues are coming from US market for OFSS. So, and interestingly, 30% of the revenues are from the maintenance services, which is very stable and offers a very high margin for Oracle Financial Services. So these are the two stocks we have given a buy recommendation, both Cyient and Oracle Financial Services.
Okay, let's quickly get your BTST in, Jay, as we are 10 minutes odd away from the closing session today, and it's been a smart recovery. What would you pick to build on that momentum?
I'll place my bets on the auto sector, and I'm going with Bajaj. And so I think the stock with the stop loss of 8,100 is possibly heading to 82.90 tomorrow. This momentum that we are seeing today is likely to continue. And even the slightly higher time frame, it's forming a potential inverse head and shoulders pattern. So I would, bet Bajaj Auto would do well tomorrow.
Bajaj Auto is something that you would pick for tomorrow as a BTST idea. Very quickly, some of the other late afternoon buzzers. Jasmeet is joining us for more details on that.
Well, right, yes, thank you for that. So here's a list of stock buzzing into on the back of earnings. Let's quickly get you all the key takeaways as well as the financial highlights. The first one on my list is MCX. When you look at the numbers, the numbers are in line with the estimates. There's strong top line growth expected from the company, and the company has delivered that. When you look at the operational expenses, there are slight elevated given the higher revenue. When there is a small miss on EBITDA and PAT as well, and company reports the best margin in last 13 quarters, which is positive for the company. When you look at the financial aspect of the company, the revenues are 28%, while the EBITDA is up 51%. When you look at the margins, they are at 64%, but even the net profit is up 50% for the company. The next one on my list would be Bharti Airtel. Well, the key takeaways for the company would be the EBITDA margin has impacted higher cost of material. That's why the EBITDA is missed from what the estimate was. When you look at the volume has decreased 1.7% on YOY basis of the same quarter. The utilization of expanded capacity has also impacted and will be impacted in the coming quarters. When you look at the financial aspect for the company, the revenue is down 6.9% in line with what EBITDA is down 13.3%. While the margins are 15.3 versus that of 17.2, we see a 200 basis point of gap between the margins in the previous quarter. When you look at the net profit is down 12.2%. While the next one on my list is Narayana. When you look at the key highlights of the company, net profit fell 2% on YY basis, while the Cayman segment of the company has seen the EBITDA below the estimates. Now, what led to the impact of the EBITDA for the company would be the miss on what was estimated 45%, a sharp decline. This was on the account of losses of the new project that the company had with regards to integrated care system. When you look at the profits, when the profit is below the estimate due to the higher depreciation interest expenses, while the Indian overall revenue saw a slight uptake by 3% on YOY basis. When you look at the numbers of the company, the revenue is up, while the EBITDA is also up by 11.4%. The margins are at 22.1% versus the 23.1% in the previous quarter. There's a slight miss in the margins. The net profit is down by 2.3%. The last one on my list is Neogen Chemicals. While the Dahej plant was unavailable on the account of fire incident, which led to slight impact on the revenue. When you look at the pricing, that has remained soft on the overall portfolio of the company, while the decline in the realization has also impacted the company's financial performance. When you look at the key financials, the revenue is up 3.8%, while the EBITDA is up by 2.3%. When you look at the margins, they have been reduced slightly by 20 basis points at 16.9 versus there are 17.1% in the previous quarter, while the net profit is down by 10.5%. So these are the stocks in my radar for today.
Okay, any of these on your watch list? Most of them have not done very well, so maybe not those, but as we're going into a close with momentum, Jay, what is on top of mind for you, and would you be looking at some of the then consumption plays? We already saw delivery, Marico running more on that theme.
Yeah, delivery is a very interesting stock. It's got limited price history though, but the low it saw at about 257, 237 odds, I don't recall exactly. That is a very interesting low, and in the very short term, delivery is completing the move it started from the March low. Possibly one more higher high during this week, but I will be interested in buying this stock on a pullback to the move for the.
I'm just going to stop you for a second and listen into this conversation that my colleague Aishwarya is having with Bharti Airtel's Gopal Vittal.
Going forward, what are your key milestones with Extelify?
Well, Extelify is a fully owned subsidiary of Airtel, and we've got all our engineers, 3,000 engineers in Extelify. We've got all our applications, all our digital infrastructure housed in Extelify, outside the network, all the digital stuff. And we are now, and we are the largest users of our cloud. We do it ourselves. All our applications run on the cloud. We have 250 petabytes of storage on the cloud. So we are now extending the cloud to our enterprise customers. We're talking to several of them, and there's a lot of interest. The second is that we have been running software platforms of our own, which we've built, homegrown software platforms that run all our applications, all our journeys, and really enables us to do hyper-personalization, more ARPU, and so on and so forth. We're extending this also to our global telco customers. We won 2 big contracts, one with Singtel and the other with Globe. Singapore is a developed market. They've picked up one of our software platforms. And again, Globe Telecom is the largest player in Philippines. We also extended this to all our subsidiaries. So whether it's Indus Towers, it's Airtel Payments Bank, Airtel Africa, all of them are on this. And that shows you the fungibility of these platforms that can travel across sectors.
So this space does have some tech giants already existing, AWS, Azure, and a whole lot of others. What kind of a gap are you trying to fill in the market as far as this space is concerned, and maybe a market share that you have in mind for the near future?
Well, on the cloud, the market is very large, and the market is growing. I think that for companies that are looking to have a sovereign cloud, which is regulated and within the country, we are a prime contender. For companies that are looking to move applications onto the cloud and save some cost, then again we're a big advantage. And the reason for that is simple. We bring the benefit of the network as well as the data centers together in this proposition, along with storage and compute. So that's the advantage that we bring.
And
okay, so that's the exclusive interview which you're seeing playing out. But as we wrap up, top steel picks. Jay, I want to come to you on that. What a turnaround in IT, what a turnaround in steel as well. It's the banks that are languishing. I wonder if there is a FI positional, outflow from banks to IT that we're seeing right now. But my question to you about steel currently.
Yeah, if you recall in our conversation sometime in June, I had said, I'm bullish on metals, but wasn't sure if it's straight away bullish or if it's pulling back to 9,000. It's come back to 9,000 and it's turning. And this is looking like a very important support, and it's turning at a very important low. Today's low was, yesterday's low was about 1990. So I think it's starting an important move from here. I think it's bound for fresh all-time highs past the October highs about 10,200, 10,250. So the best within the metal space is possibly Tata Steel.
Tata Steel is your top pick. What about you, G. Chokalingam?
I would avoid metals because it's a big play on GDP growth, and in 3 decades, this is the first time we are seeing aggressive tariff hike against all the major economies. Obviously, the global growth will correct, and that will be negative for metal stocks. I would prefer a beaten down IT stock to metal stocks.
Okay, I just purely from the perspective of stocks which are starting to do well today, like we discussed, metals are right up there. Mr. Chokalingam, I don't know if you answered this or no, but if you had to make a choice between a Tata Steel, a SAIL, or a JSPL, would you choose any one of these three, or would you give metals a skip?
I would avoid, but if you still ask me what is a choice, I would go for a domestic play like SAIL, rather than taking a Tata Steel which has got exposure at a global level.
Jay, just wondering, you may have spoken about it earlier in the show, but as we close, they are ending almost at the high point, particularly SAIL and Tata Steel. Would you buy them for a trade?
Yeah, Tata Steel, if I had to pick a second choice for BTST, definitely Tata Steel. I'm quite bullish on the medium-term outlook of metal stocks. So I think I'm very confident. The maximum one more low below the 1990. But it is a very corrective structure from the June the decline. So I'm confident most of the metals name will do well over the next 6 months.
Okay, let's quickly start wrapping up the markets and see what's happening there as we get final commentary coming in. Jay, Bala, G. Chokalingam, thank you so much for joining. Steel is shining definitely today. You're seeing IT stocks making a very, very smart comeback. But I think the speed with which Hero Moto has dominated the street today is what is really astonishing. Just look at Nifty contributors if we quickly can and see what's pulling the weight. It's only the banks that are dragging, by the way. If this was a day where HDFC Bank and ICICI Bank were participating, you would see more than this over 0.5% rise, nearly 0.75% rise in the Nifty that we're seeing, 164 points up. So good recovery. Close to the high point of the day is what we'll end up closing. Reliance Industries, Bharti, TCS, L&T are your top gainers there. Let's pull up the Nifty heat map if we can very quickly, and you'll see some of the same picture there. Adani Ports coming up there in the top 3 and showing some action. Bharat Electronics as well. Grasim IndusInd Bank is also showing up on a good day for the markets. ITC seems to have lost most of its gains, so has Nestle. So this is no longer just an FMCG play. You have some auto, no big theme. I would say the biggest themes would be steel and IT. So let's pull up the sectoral heat map if we can. Markets have just closed, and we'll just give you a sense of what's happening there. India Defense, top of the charts, metal, Nifty Metal, Nifty Realty. These are 3 or 4 of them that have really shown some excitement coming in ahead of the monetary policy 2 days from now. I wonder if the street is pricing in another rate cut. Seems unlikely, but that could be something that we're seeing playing out, as well as some of those fears are lifting. Let's pull up the advanced decline ratio just as we wrap and look at what's happening there. You're seeing the gap widening, a pretty decent close after quite a volatile and hectic first half of trade. You're seeing the advanced decline ratio looking robust at this point. Let's pull up the top gainers and losers on the BSE 500 and just see what has taken the day and what has not. Balaji Amin's results, Thermax, in that entire capital goods space has seen some pain. ABB, Narayan, Vidale, all in pain because of their results largely more than anything else. Some rural themes are picking up. You're seeing UPL up 7% today. Star Cement, so demand, infrastructure, all of them looking good. Delivery was our stock of the day after its stellar numbers, and that has zoomed as well. Capri Global and AB Capital also rounded off. So you're seeing a strong close. You're setting up for a decent opening tomorrow after a lot of tumultuous back and forth on global trade, etc. What's become clear now is that yes, there might be some statements overnight, and we don't know what's going to come from the US overnight. But the fact is that there is now strength in the Indian markets. Moving on from what we're seeing, if we could just close out with what Rhythm Desai has said, and they put out a note. Morgan Stanley put out a note today, and we should pull up those graphics if we can, which talk very clearly about how the worst is over for India. He sees the Nifty and key indices hitting new highs in the weeks to come. I'm talking about the Rhythm Desai note from Morgan Stanley, which has really shown a lot of optimism. They're saying the re-rating of Indian equities is on the anvil for fundamental reasons. Get ready for new highs in the months ahead. Well, maybe the market has woken up to that because the pessimism without real reason on Indian equity, which has been seeing for these last many days, seems to have been shrugged off today. Well, that's all the time we have on this edition of India Market Close, but we leave you with all the corporate action for the day as we go into that break. Thank you so much.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज़ हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की ज़रूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशिता ही ऐसे बॉय मिलते मुंबई में, चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
Hello and welcome. Good afternoon. You're watching Market Express and I'm Malika Mishra. Let's get straight into the show. Benchmarks bounce back after a bad last week. Nifty shut shop with gains of over 150 points. Sensex jumps over 400 points. Most sectors ended the day in the green. Defense, metals and realty lead gains, while FMCG and finance were on the back foot. Shree Cement delivers a blockbuster Q1 FY26 with net profit soaring 130% year-on-year to 643 crore rupees, up from 279 crore rupees. Revenue grew a steady 3% to 5,281 crore rupees, beating estimates. The real highlight, EBITDA jumped 43.7% to 1,333 crore rupees, driven by strong operational efficiency, pushing margins to an impressive 25.2% from 18%. With robust volume growth and cost optimization, Shree Cement is cementing its position as a top player despite market challenges. Marico delivers a solid Q1 FY26 with net profit climbing 8.6% year-on-year to 504 crore rupees, up from 464 crore rupees, beating analyst expectations. Revenue surged an impressive 23.3% to 3,259 crore rupees, driven by strong demand for Parachute coconut oil and Saffola edible oils. EBITDA grew 4.6% to 655 crore rupees, though margins narrowed to 20% from 23.7% due to rising input costs and higher advertising spends. The food segment shone with robust growth, while international markets maintained double-digit momentum. Sarda Energy was buzzing away in trade. The company's net profits soared 120% year-on-year to 434 crore rupees, fueled by robust growth in its power segment. Revenue jumped 76.3% to 1,633 crore rupees, while EBITDA more than doubled to 617 crore rupees. The standout, a margin expansion to 37.8% from 28.1%, driven by strong operational efficiency. Utkarsh Small Finance Bank plunged in trade. The company reported a net loss of 239 crore rupees against 137 crore profit last year. Net interest income plummeted 30% to 402 crore rupees, while operating profit tanked 71% to 92 crore rupees. Margins are under severe pressure, with credit costs spiking to over 8%, nearly double the previous quarter. Gross non-performing assets have surged to a worrying 11%, and loan growth stagnated at just 2% year-over-year. Escorts Kubota has posted a blockbuster Q1 FY26 with net profit surging to 1,400 crore rupees, up from 304 crore rupees earlier, driven by a one-time gain from its railway business divestment. Revenue slipped 2.8% to 2,483 crore rupees from 2,556 crore rupees, reflecting softer tractor and construction equipment sales. EBITDA edged up 2.6% to 325 crore rupees, with margins improving to 13% from 12.4% thanks to better product mix and cost efficiencies despite the top-line dip. Sarda Energy's Q1 FY26 results show a robust 79% revenue surge to 645 crore rupees, up from 361 crore rupees year-on-year, driven by strong sales of its Rizta and 450 series scooters. The Bengaluru-based electric two-wheeler maker narrowed its net loss slightly to 178 crore rupees from 183 crore rupees. However, EBITDA loss widened marginally to 134 crore rupees from 128 crore rupees, reflecting higher R&D and marketing spends. With a 14% market share and a 77% volume CAGR over FY22-25, Ether continues its push towards profitability, supported by a 32% retail expansion. ITC's Q1 results shine with strong cigarette sales, driving revenue up 20.6% to 19,750 crore rupees. However, net profit barely grew at 0.1%, missing analyst targets. FMCG margins improved slightly but faced pressure from rising tobacco and raw material costs. Premium and digital-first products continue to show robust growth for the company. Macquarie stays outperform on ITC, sets target at 500 rupees, sees strong cigarette growth and FMCG momentum. Jefferies holds a buy call, aims for 535 rupee target. Morgan Stanley maintains overweight with 500 rupee target as well, remains upbeat on premium cigarette offerings but cautious on the paper segment. All three brokerages highlight robust cigarette demand but flag pressure in paper and margins elsewhere. Tata Power delivers a robust Q1 performance powered by its solar EPC business and Odisha distribution gains. Despite a regulatory charge denting net profit, operational strength shines through. EBITDA jumps 15%, beating estimates. Net profit remains in line. Solar and distribution segments drive growth and margins expand. Strong contribution from cell and module businesses was observed. A regulatory charge of 570 crore rupees weighs on the bottom line. India's IPO street buzzes with action as 11 new issues go live this week. JSW Cement rolls out a 3,600 crore IPO from August 7th to 11th, while Highway Infra and Knowledge REIT opened from August 5th to 7th, with issues worth 130 crore rupees and 4,800 crore rupees respectively. A mix of infra, cement and office realty headlines the main board, alongside 8 SME IPOs, including Savalia Foods and Essex Marine. Kotak says Q1 earnings disappointed, though slowdown pace softened. Consumer companies saw weak demand and pressure on profits. Banks and IT firms showed no surprises. Trends stayed sluggish. Overall, recovery still is distant across sectors. On the other hand, Jefferies believes that Q1 earnings came in better than feared, with over 100 companies reporting downgrades persist, but the pace of cuts slowed quarter on quarter. Cement, autos and non-lending financials fared better, while lenders remained weak. IT stocks may rebound tactically, prompting Jefferies to raise sector weight to neutral. JM Financial begins coverage on Emcure Pharma with a buy call and 1,470 rupee target. India business is bouncing back with 10 to 12% growth expected. Exports drive over half of the sales, led by complex generics. Low capex and margin gains to fuel strong financials over the next 2 to 3 years. Delivery reports a 5.6% rise in Q1 revenue to 2,294 crore rupees, driven by express parcel volumes. EBITDA climbs 53%, with margins improving to 6.5%. Net profit grows 67% to 91 crore rupees on stronger operations and other income. Core segments deliver double-digit growth, supported by cost discipline. Neogen Chemicals Limited reported a 10% YOY decline in Q1 consolidated net profit to 10 crore rupees from 11 crore rupees earlier, impacted by a March 2025 fire at its Dahej plant and soft pricing across its portfolio. Revenue rose to 187 crore rupees, driven by volume growth in Bulichem and a 5 crore contribution from Neogen Ionics. EBITDA grew 2%, but margins dipped due to lower realizations. The company received a 80 crore rupees insurance for the 348 crore Dahej loss, with construction ongoing. Finolex Industries reported a challenging Q1 with consolidated net profit crashing 80% YOY to 98 crore rupees from 500 crore rupees, impacted by the absence of a 417 crore exceptional gain from FY25. Revenue fell 8% due to lower PVC realizations and a 2% volume drop in pipes and fittings. EBITDA plunged 55% with margins halving to 9% from 18%, driven by higher raw material costs. Shares dropped 3%, reflecting a 36% annual decline. JK Lakshmi Cement's Q1 consolidated net profit surged 164% YOY to 150 crore rupees, driven by 11% revenue increase. EBITDA rose 40% with margins expanding to 18% from 14% earlier, aided by lower power costs. Cement volumes grew 7% to 2.76 million tons. The company plans to double its Surat grinding capacity to 2.7 MTPA for a 225 crore and acquire a 26% stake in Opera Vayu for 4 crore rupees to secure renewable energy. A 325 crore railway siding at Doug is also underway. The Delhi High Court on August 1st quashed the fraud classification on Religare Finvest, a subsidiary of Religare Enterprises, ordering 14 banks to remove RFL from the RBI's Central Fraud Registry within 2 weeks. The court ruled that banks including SBI and Bank of Baroda failed to provide RFL a hearing, violating natural justice principles. Now, this follows RBI's July 23, 2025 decision to lift RFL's corrective action plan. NMDC reported a 42% YOY increase in iron ore production to 3.09 million tons in July 2025, which is up from 2.17 million tons in July 2024, driven by strong domestic steel demand. Sales rose 13%. However, Bela lump prices were cut 3% to 5,700 per ton, and Bela fines by 2% from June, reflecting softening market conditions. Chhattisgarh mines led with 55% production growth, while Karnataka saw 26%. NMDC's FY26 target remains 55 MT, aligning with its 100 million tons goal by 2030. Multi-Commodity Exchange of India, MCX, delivered a robust Q1 FY26 with consolidated net profit soaring 50% QOQ, slightly above the estimate. Revenue grew 28% to 373 crore rupees, missing the 389 crore forecast, driven by an 80% YOY surge in average daily turnover, particularly in bullion. EBITDA rose 51% with margins at 65%, the highest in 13 quarters, though below the 68.8% estimate due to elevated operating expenses. The board approved a 1:5 stock split to boost retail participation. Transformers and Rectifiers India reported a stellar Q1 FY26 with consolidated net profit soaring 224% YOY to 68 crore rupees from 20 crore rupees, driven by improved pricing power and operational efficiency. Revenue jumped 64%, fueled by a 10% export contribution. EBITDA rose 109% with margins expanding to 17% from 13%. The unexecuted order book stood at 5,246 crore with new inflows at 665 crore rupees. Trill began a 22,000 MVA capacity expansion at Moraiya, targeting a $1 billion in revenue by FY28. The Enforcement Directorate has stopped up the pressure on Anil Ambani by sending letters to several banks. It's asking for loan details tied to Reliance Housing Finance, Reliance Communication and Reliance Commercial Finance. Officials may also summon bank staff to question their role in handling credit decisions. Now, this move forms part of a broader probe into alleged fraud worth 17,000 crore rupees linked to money laundering around the Reliance Anil Ambani group. Indian exporters are under pressure as the US imposes a steep 25% tariff on their goods starting August 7th. Trade bodies have urged the government for fiscal and policy support, including cheaper credit, faster tax refunds, and reinstated incentives to help them stay competitive. Commerce Minister Piyush Goyal says the government is engaging firmly with the US while exporting cost-cutting measures like reforming logistics and interest burdens. Retailers are going big on private labels this festive season. D-Mart, V-Mart and Shoppers Stop are pushing in-house brands to boost sales and margins. D-Mart's private label sales hit 3,322 crore rupees last year, double in 2 years. V-Mart's own brands now make up 64% of apparel sales, while Shoppers Stop is at 18%. As prices pinch, shoppers are switching to store brands for value. 69% say they help save money, and many now trust their quality too. OPEC Plus is ramping up oil production by 547,000 barrels per day in September, fully reversing its 2.2 million barrel cut and boosting UAE output by 2.5 million barrels daily, or 2.4% of global demand. This move, driven by Saudi Arabia, Russia and 6 other countries, aims to reclaim market share amid fears of Russian supply disruptions as the US pressures India to halt Russian oil imports by August 8th. Brent crude holds nears $70 a barrel, supported by strong demand and low stocks. Tesla has launched its first charging hub in India right in Mumbai's Bandra Kurla complex. The station includes 4 fast superchargers and 4 slower destination chargers. A quick 15-minute charge can add up to 67 kilometers of range, costing around 24 rupees per unit. Tesla plans to set up 3 more hubs across India by the end of this quarter. Bharat Taxi service has launched in Delhi, taking on Ola and Uber with a new driver-first model. 8 cooperatives have joined hands to run the platform, which promises zero commission and full fare transparency. The service has onboarded 200 drivers and is currently available via phone and website, while an app is in the works. Lodha Developers is getting up to enter the Delhi NCR housing market. The company plans to acquire at least 1 land parcel in the current fiscal year and launch its first residential project there in the next financial year. Lodha made this move after strong growth in markets like Mumbai, Pune and Bengaluru, including a 42% jump in net profit and 10% growth in bookings during Q1 of FY26. Apple is quietly working on something big, its own AI chatbot that could rival ChatGPT. Now, this new project, reportedly called Apple Intelligence, aims to change how users search on their iPhones. Reports say Apple is planning to launch this AI-powered search tool just ahead of the iPhone 17 release next year. Unlike traditional search, this tool will use generative AI to give direct answers rather than just links. If Apple pulls this off, it could completely change how users interact with their devices, making AI a core part of daily phone use. A huge row has erupted over an altercation at Srinagar airport, where a senior army officer allegedly attacked and severely injured several SpiceJet ground staff. SpiceJet has filed a police complaint and also written to the Ministry of Civil Aviation, calling the incident a murderous assault and demanding action. The Indian Army has extended its full cooperation for this investigation. It's day 4 of a protracted gun battle between security forces and terrorists in the forests of Jammu and Kashmir's Kulgam district. As terrorists appear to be well entrenched, troops are treading cautiously even as drones and helicopters have been used in the operation to track down terrorists. Intermittent firing and occasional blasts are heard from the operation site. Shibu Soren, Rajya Sabha MP, former Union Minister, Jharkhand Chief Minister and one of the founders of the Jharkhand Mukti Morcha died today. He was 81. He had been under treatment at Delhi's Sir Ganga Ram Hospital for over a month and his condition was critical for the past few days. Patna's new double-decker flyover, built at a cost of 422 crore rupees and inaugurated on June 11th, has developed cracks and sunken parts just 2 months later following heavy monsoon rain. Videos show water pooling and surface damage on the upper end and lower decks. The incident has sparked questions about construction quality, drainage planning and accountability. Officials are inspecting the site and urgent repairs are underway. ISRO has set up the Himalayan Outpost for Planetary Exploration Station in Ladakh to mimic Moon and Mars conditions. 2 scientists will live inside the habitat for 10 days, testing human endurance and spaceflight systems under harsh, high-altitude conditions. The project is a rehearsal for India's future missions to the Moon and also the beyond. In a historic first, the Philippine and Indian navies conducted joint patrols in the South China Sea, a bold move signaling stronger defense ties. The 2-day exercise, starting Sunday, involved Indian warships INS Delhi, INS Shakti and INS Kiltan alongside Philippine frigates BRP Miguel Malvar and BRP Jose Rizal. General Romeo Bronner called the operation a success, noting no major incidents despite Chinese vessels shadowing the fleet. This comes as President Marcos visits New Delhi to deepen ties with PM Modi amid tensions over China's claims in the region. Over 3,200 Boeing defense workers have gone on a strike after rejecting a new contract offer of 4-year labor agreement. The union says Boeing's proposed pay and benefits fall short. Boeing claims it offered a strong deal and says backup plans are in place to keep production running. The walkout adds fresh pressure on the aerospace giant, already dealing with safety and supply challenges. South Korea has taken a step back to dial down tensions with North Korea. The army removed the loudspeakers along the border that were used to blast propaganda messages into North Korea. These speakers were reinstalled earlier this year after Pyongyang sent balloons filled with trash into the south. But now Seoul says it wants to ease tensions and reduce the risk of conflict. Officials say they're still keeping an eye on the situation but hope this move creates space for calm. And with that, it's a wrap on Market Express, but do stay tuned to NDTV Profit as we continue to give you a lot more news and updates.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
हेलो बोलिए मैडम।
Nifty ends about 24,700 to snap the two-day losing streak. Sensex gains over 400 points. Most sectors close in red, with defense index gaining the most. Mid and small cap indices outperform the benchmarks. More trouble for Anil Ambani. ED has sought details from 12 to 13 banks about the due diligence conducted and recovery efforts on the loan defaults by Anil Ambani's group of companies. The agency has summoned the younger Ambani for questioning in Delhi tomorrow. All decks for NSE's IPO may be cleared very soon. Sources say SEBI's high-powered advisory committee is likely to make the final decision on settlement of the exchange's co-location and dark fiber case in its September meet. US tariffs rattle Indian exporters. They demand financial support to offset the US tariff impact. They want quick action on the GST refunds, labor reforms, and resolution of banking issues. Vietnamese EV maker VinFast sets up manufacturing plant in Tamil Nadu's Thoothukudi with an investment outlay of 16,000 crore rupees. VinFast tells NDTV Profit that it plans to make 50,000 electric cars and scale up capacity to 1.5 lakh soon. Tesla electrifies India with its first ever charging station in Mumbai's Bandra Kurla complex. The supercharger will power Tesla's Model Y with a whopping 267-kilometer range in just 15 minutes. Indian businessman Arvi Bahl completes his trip into space on the 34th flight under Blue Origin's space tourism mission. The 10 minutes journey also included crypto billionaire Justin Sun. Hello and welcome. This is Profit 360 on NDTV Profit, and I'm your host Malika Mishra. Along the next half an hour, we will be bringing you the latest on markets as well as national and international news, so stay tuned. The Sensex bounced back 500 points from the day's low, and the Nifty too rallied to close about 24,700 points. Metals and auto shares led the benchmarks. My colleague Harsh now will join us to give us a wrap on the day's market action.
Well, it was a stellar recovery in trade today with the Nifty 50 closing above the 24,700 levels, and it's a key level for the benchmark indices at the time as well as the opening of today, where we couldn't have anticipated such a strong up move during the day. When you look at Nifty, it's closed above that and it snapped a two-day losing streak. We've also seen the benchmark indices largely outperform the broader markets, and that's led by key stocks in the Nifty 50. Hero MotoCorp was a surprise one. While it's reacting to numbers for its July auto sale, it ended upwards of 5% in trade today. We also saw some positive momentum on the steel makers as well, and that led to the Nifty 50 outperforming the broader markets. We've also seen the Nifty Midcap 150 also ending over 1%, with gains led by Aditya Birla Capital as well as Delivery, both reacting to numbers as well for Q1. We've also seen Aditya Birla Capital gain over 10% after posting its Q1 results, largely putting the Midcap 150 on a positive pedal. We've also seen the small cap 250 gain over 1%. Gains were led by stocks like eClerx as well as Capri Global Services. And we spoke about the metals. The Nifty Metal Index ended over 2% in trade today. We also saw SAIL as well as Tata Steel being one of the biggest gainers for the Nifty Metal, and that's largely led by a bunch of news flows which are reacting positively for the Nifty Metal Index for anti-dumping duty potentially, which could come essentially on Nepal, and that will help the prices in India as well. Finally, in terms of some sectors, we saw the Nifty FMCG as well as financial services largely end on the flat note, but the PSU, IT, auto, realty as well as metal index
gained over 1%. Now it'll be key if we can maintain this level going forward for the Nifty with a long-term resistance at 24,900 after the steep correction below 25,000. But it sets us up well on a strong footing for trading session tomorrow.
Right, Puneet, thank you so much for giving us that wrap. Meanwhile, viewers, Mark Matthews, the head of research Asia at Julius Baer, highly doubts that the markets will see another bleak 1995-like scenario and a recovery can be expected very soon. Let's listen in.
The Nifty is down for 5 weeks in a row. I found that only happened 4 times before, which was 2022, 2096, and 94. And it was always up double-digit a year later, with the exception of 1994. So that 5-week correction in 1994 actually happened at the end of the year in October and November. And so why that year didn't work, 1995, was that emerging markets started to come under great scrutiny in 1995. People realized that there was a problem. Of course, it eventually resulted in the Asian crisis, and RBI was worried about inflation, so they raised the cash reserve ratio to 15% and the official bank rate to 15%. Well, the CRR is at 3% now and the repo rate's 6%. So I highly doubt that we're going to have another 1995, and my guess is it's going to be more like 2022, 2020, or 1996, where you have a big recovery in the Nifty after you've had a 5-week-in-a-row decline.
Let's also get you another expert voice. Investor Vijay Kedia told NDTV Profit that he is sitting on as much as 25 to 30% of cash. Now, this is one of the highest amounts of cash that he has been sitting on thanks to global turmoil. Let's listen in to a portion where he explains the rationale behind doing so.
Frankly speaking, let me tell you that I'm sitting on some cash and I am looking for some opportunity. But as on today, while I'm talking to you, I am little conservative. I'm little cautious in this market because in many pockets, valuations are not cheap. And the stocks which are actually cheaper, valuation-wise, people are not interested in buying those shares. So this market is little tricky. And I feel that this year itself, this 2025 is really is very tricky. Look at what is happening around the world. So I will tell you, so far cash is concerned, if I include my stocks, which I never do, but I have invested in some liquid shares because keeping cash is really is painful for me. I don't get sleep. I have said this a number of times that keeping cash is really a pain for me. But at this moment, I have little cash, and maybe the investment which I have made in liquid shares, if I include all those, then it could be somewhere around 25-30%.
And moving on to an NDTV Profit exclusive. Sources tell NDTV Profit that the final decision on the long-awaited NSE IPO will likely be taken up in SEBI's next advisory committee meeting. Let's get in my colleague Charu for more on this. Charu, what can be expected in the September meet of the committee?
So the market regulator Securities and Exchange Board of India is likely to decide on the settlement applications by the National Stock Exchange based on their applications made in the co-location as well as dark fiber case. Now, what's interesting here is that the HPAC committee recently met for another decision related to a settlement application by NSE in another case. This pertains to a 2021 case that dealt with a third vendor dealing with the storage of data related to the exchange. Now, that is a completely different case that was settled for about 40 crore rupees. But following this, the other two things that are going to be on the agenda of the HPAC committee dealing with the NSE settlement cases in the September meeting will be likely deciding on the co-location and dark fiber cases as well. Now, we must understand that this is very crucial for the exchange to get a no objection certificate from the regulator. Post this, they will be preparing their draft papers for the IPO DRHP from scratch, which is likely to be done by the end of December or beginning of January, following which at the very end of FY26 or during the initial time of FY27, the IPO is likely to be launched. We must also understand that this will also depend on how conducive the market is at the time, but these are the developments that we know for now. More details will follow shortly.
Right, Charu. Thank you so much for that. Definitely smoothening the way for NSE's IPO, and all eyes will be on that September meeting. But moving on, viewers, let's brush up through certain earnings. Transformers and Rectifiers India stock was up 8% today on the back of a solid set of first quarter numbers. Chanchal Rajora, Group CFO and advisor of Trill, told NDTV Profit that their focus would now shift to high margin orders and expanding capacity. Let's listen in.
Basically is that look, we are basically in the best of our time. We're not seeing this time in past. All in previous years we are just in pain, right? So now when the things are in our favor, we are trying that how we can maximize both the things, right? But in other way, we are not greedy that we need to have the gross margins increase, and now gross margins has reached to the maximum level.
Okay.
But now what we are more focused on the execution side, we are more focused on the better payment terms, and we are more focused that how we can deliver the product in time, right? It coming to next 3 quarters, if you see in last quarter 4 meeting, our MD has said that this year we will be concluding around 8,000 crore rupees of order book. We affirm that we will be nearer to that, right? And in next 7 quarters also we will be steadily growing into that. And as far as the profitability size is concerned, that yes, we have reached to a level where we will not go down, we will a little bit better than this.
And in our interview with ABB India, following their weak quarterly results, which by the way also pushed down their stock by about 5%, we asked the management for their outlook on this year's growth. Let's listen into what they had to say.
It's a time back where we need to sharpen our pencils in terms of cost, in terms of sourcing the material, and also in terms of how do you really play with the mix of the offerings which you go to different markets. And I think this is something which we need to come back to the blackboard to say, guys, given the situation, what you need, what you have to deal with, and an uncertainty about how long it could prevail, right? We need to really do a bit of a homework to make sure that in the next few quarters, we're able to correct the situation as what we see.
Yeah, but does it enable you, or does this homework enable you, because you are prepped for it in some fashion, right? Is there some sense of what's the kind of band that you might stay in, and is there a probability or a possibility that you might end the year at the lower end of the band, if you're giving out a band in the first place?
So I think we had given a band, let me be honest. We said we will be in a band of 12 to 15%, right? So on this quarter, we had a bit of one-offs which was there, and that's not going to be there in every quarter. So our endeavor has always been there in a predictability standpoint between these bands. That's where we see that we should end up the year, provided we have good revenue offtake and we don't have these type of topics of QCOs, other things impacting us negatively.
Let's now get you a crucial update on the Anil Ambani fraud case. The Enforcement Directorate has termed the 17,000 crore rupee loan fraud linked to Anil Ambani Group companies as one of the biggest IT cases that has ever been probed. Now, we are now being joined by Shimi with more information on the same.
The Enforcement Directorate has termed it as one of the biggest corporate loan frauds under investigation as it expands its probe into 17,000 crore of loan fraud linked to Anil Ambani Group of companies. The action follows CBI complaint against Reliance Commercial as well as Housing Finance, which together owes over 12,000 crore while remaining 4,000 crore linked with Reliance Communication. Now, a bit of recap is that the case escalated after 3 days of massive search operation on July 24th, uncovering a complex web of transaction, financial irregularities, alleged quid pro quo dealing with Yes Bank promoter Rana Kapoor, suspected kickbacks to some bankers to turn blind eye on some of the loans, investment routed via shell firms, and a fake bank guarantee of around 68 odd crore. Now, using some Odisha-based entity. Now, following this, Anil Ambani has been summoned to appear before ED with a lookout notice also been issued to prevent him from leaving the country. The ED, meanwhile, also written to at least 12 to 13 banks seeking details on the, recovery and the timeline of defaults to understand whether the process been followed, why there were no criminal complaint against ADAG group of companies when most of the loan actually turned into NPAs. And at the same time, ED also summoned some key executives executives of ADAG group of companies, including Amitabh Jhunjhunwala, known to be very close with Anil Ambani. And in fact, he's been summoned to understand whether he helped to divert all these loans to, some of the shell companies and, coming those money back to the Anil Ambani group of companies. So those questions will be raised and asked during the questioning of the key executives. And in fact, the most important question remains is that whether Anil Ambani faced detention with precedents in the similar sort of financial fraud cases which we have been seeing. We have been reporting that the ED next move is very crucial. We've been closely watching that whether Anil Ambani will face the similar sort of fate, whether he will be detained by the enforcement agency.
Corporate India is witnessing an unusual wave of untimely top management exits, with around 40 departures recorded across BSE 500 companies so far in 2025. Let's go across to my colleague Hirul standing by to break down this trend for us.
Thank you so much. It's been an interesting 2025 when you talk about India Inc., where you've seen a lot of untimely exits that have happened at top management levels. Let's quickly look at what's happened, Around 40 major exits that have been seen if you have to look at BSE 500 companies. 40 is a round figure that we're looking at in terms of what has happened so far. And when you talk about all of these exits, they include top management positions like MDs, CEOs and MDs, as well as CFOs. Now let's look at in 2025, if you have to look at Nifty 50, 4 Nifty 50 companies have seen top management exits, and these have been untimely as well. Let's start off with the first one that we are talking about, HUL. Rohit Java, whose designation was MD and CEO, he actually stepped down, and this was on the 31st of July 2025 was his date of exit. His reason was pursuant to mutual agreement, and it was 3 years early before his term ended. Moving on, if you have to look at a Hero Motorcorp as well, Niranjan Gupta, who was the CEO as well. If you talk about his exit, his date of exit was April 30th, 2025, and his reason was to pursue other opportunities in terms of his career goals. On number 3, if you have to look at the third one, you have IndusInd Bank, and I'm sure all of us know what's transpired with the IndusInd Bank. Sumant Katipalya, his designation was MD and CEO at that point in time. Date of exit was the 29th of April 2025, and he resigned citing moral responsibility for all the accounting discrepancies that we've heard of in terms of IndusInd and the kind of action that was taken by RBI as well back then. Lastly, if you have to look at the next one, let's quickly look at Bajaj Finance. Anup Kumar Saha, his designation was MD then. And if you have to look at what has happened with him as well, his exit date was the 21st of July, 2025, and then it's been personal reasons for his exit. So these have been the noteworthy ones on Nifty 50. Let's quickly look at a few of the ones in terms of BSE 500 as well. Firstly, you have a PNB Housing, which has been the latest announcement where Girish Kousgi, MD and CEO, will be exiting. Let's quickly look at the details that he shared so far. 28th of October 2025 will be his last working day, and he stepped down a year before his 4-year term was set to conclude. And again, there are personal reasons to this aspect as well. Talking about the other one is a Karnataka Bank again. So you have Sri Krishna Net, MD and CEO of Karnataka Bank. And if you talk about his details as well, 15 July 2025 was his date of exit, and he's resigned due to personal reasons well ahead of his term's completion. So 2 from the BFSI space. The next one coming in is a Britannia again. So out of the 4, we've spoken about, HUL earlier, Britannia Rajneet Singh Kohli. His designation has been CEO, and if you talk about his exit details as well, 6th of March 2025, and this is 2.5 years before his term ends is the exit that we've seen. And very lastly, Gensol Engineering. All of us know the entire Gensol saga with the Jaggi brothers. So Anmol and Puneet Jaggi, both MD and, whole-time director, both of them, if you have to look at the exit, 12th of May 2025, and the reason has been after the SEBI probe with regards to Blue Smart. So these have been few of the ones that we've highlighted out of the 40 that we've spoken about so far. Over to you.
Right, Hiral. Thank you so much for breaking down those top-level exits. But viewers, news breaking now. Sources tell NDTV Profit that Rani Kapoor, mother of late Sanjay Kapoor, who was chairman of the Sona BLW, has written to the UK police asking for an investigation into her son's death. Let's go across to my colleague Vishwanath Nair joining me on the phone line. Hi, Vishi. Please give us more details.
Right, so the development seems to be that a letter has gone out from Rani Kapoor to the police authorities in the UK seeking a deeper investigation into Sanjay Kapoor's death. If you remember, in June, Sanjay Kapoor suddenly passed away in London. At the point in time, there were news reports that this was because of a heart ailment and that is why he passed away. However, his mother, Rani Kapoor, has alleged questionable circumstances, suspicious circumstances behind his death. This was also mentioned in the letter that she had sent out to the board of Sona BLW last month, where she had actually sought a deferment of the AGM, the annual general meeting, where her daughter-in-law, Priya Sachin Kapoor, was to be appointed on the company's board. Now, of course, that there has been a lot of opposition from the company as well. They have repeatedly said that Rani Kapoor actually does not hold any direct or indirect control of Sona BLW, and that Priya Sachin Kapoor's appointment was entirely within the rules that guide how these appointments should happen. So there was no reason to hold back the AGM. Of course, the AGM did happen, and the shareholders voted in favor of appointing Priya Sachin Kapoor on the board. But now a new angle being thrown in here, Rani Kapoor seeking further investigation from the police into Sanjay Kapoor's death. So let's see what happens after this.
Okay, thank you so much for those details, Vishwanath. And we'll continue to track all the developments on this case. But moving on, viewers, US President Donald Trump's tariffs on India have made the Indian exporters jittery, especially those in sectors like automobiles, textiles and electronics. These exporters are urging the government to provide urgent support to alleviate the tariff impact. Let's now go across to my colleague Rishabh, who's going to help us understand their exact demands and the government's response to them.
Right, over the weekend, the Commerce Minister has held a series of these outreach meetings with various key exporters, various key sectors. In Mumbai, we had the steel exporters, we had marine and agri producers, as well as textile producers come out and meet the Commerce Minister. All of them, of course, in the context of fresh 25% tariffs being imposed by the US on Indian goods. What we're picking up is, of course, the fact that these exporters have asked for urgent fiscal as well as policy support from the government. Now, these are not very fresh views. These have been long-standing demands of these exporters. Remember, these exporters meet the Commerce Minister almost every month, and these are repeated demands. But with the context of these 25% tariffs, these demands have a fresh sort of impetus on them. What we're seeing is that they want quick action on GST refunds, labor reforms, as well as banking issues. In terms of the export credit also, they've urged the government to expedite that matter. What we've also picked up after speaking to a bunch of these exporters is that the government is maintaining that trade talks with the US will take a lot of time. But what will not take time is the government's action to support these exporters. Now, what we'll also see is certain sort of market access initiative dues being cleared for these exporters. There's a 2250 crore rupees export promotion scheme that is in the works that was announced in this budget that has not been implemented yet. So that is something that the exporters are pushing for because they really, really want to explore new geographies after these tariffs have come in. So you have to diversify beyond the US onto other markets like Latin America, like Europe. So that is what these market access initiative dues will be for. They're also pressing for faster implementation of FTAs with countries like Peru, with Chile, with Mexico, with Australia. They really want to explore these new markets and open other geographies up as this major geography in the US might be seen slowing down or closing up. So that is something that we're picking up from these exporters. The government has reiterated that they are open for fiscal support. So that is something we're picking up.
Right, Rishabh. Thank you so much for that. And viewers, that's all the time we had on this edition of Profit 360. But do stay tuned to NDTV Profit as we continue to give you a lot more news and updates.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is Puneet Javeri. And today we're going to be talking about a possible turnaround in an RK Forgings.
Yeah.
Puneet clearly skeptical by your face itself. So it's difficult to argue against that with my co-anchor today. But let me first start off with what I want to know about our RK Forgings. One, there was a one-time knock with regard to inventory, and that has impacted margins for FY25 Q4, but moreover full year as well. How will margins recover by FY28? Because what they are saying is that margins will recover to 24 to 25% by FY28. If it's just a 1 quarter problem, why is it going to take 3 years for the margins to recover fully? I don't know if you have an explanation for this, but I'm certainly keen to know this aspect. Do you have one?
No, my point is larger that the company is still maintaining that this year they might go to 19 to 20% as well. And given quarter one, that's still, and the uncertain export outlook that is there. And as you rightly said, because they've already said that they've solved the inventory issue.
Correct.
So definitely,
so why shouldn't it
why should it take 3 years? Yeah, definitely.
Okay, so we'll ask them that. Have the relevant system upgrades happened? Why was there the inventory problem? Inventories were the price or the value of the inventory was overstated, and therefore we had to take a large cut. That is because of certain systemic issues. There was no cash outgo as a result of this. It was purely accounting which was the problem. And of course, therefore, because there was an overstated inventory, there was overstated profitability for past years. Not quantified as to which year how much, but that's certainly a concern, because that means the books of accounts itself for the last 3 years and the metrics that we will read into are not entirely accurate. But for the purpose of the impact, we've taken FY25, and that's what the company has also done. Now, have those relevant system upgrades therefore happened to solve for this problem? It was supposed to happen by September of 2025. I'd be keen to know whether that has actually been carried out, or are we on course? Third piece is how comfortable are they on numbers at this point? What is the trend that they are seeing? Also, how comfortable that there is no fraud involved? That's the other piece I'd want to understand. Risk to the margin recovery, if at all any. As Puneet said, 19% odd margin expectation for FY26. Whether that is under a threat, or is there any risk of that happening? The demand trend, both with regard to the tariff as well as global geopolitics, both are key risks for an RK Forging where demand is concerned. So therefore, I'd want to understand what that impact is, and they've guided for 15 to 20% growth for FY26. Can they do that for FY26 firstly? And whether how long can they do that for is really going to be my question. But I'll hand it over to Puneet to take us through what the company is all about and to explain the setup.
Well, definitely, it's been an integrated player over the last 3 to 4 decades, started and makes rather engineering, metal and forging companies. It started off as a player for railways and then has gradually integrated itself in the global auto segment and has been one of the key players in the forging as well as the casting aspect of it. When you look at their first plants, they have a major plant in Jamshedpur in Kolkata as well as in Kolkata, and they have been looking to modernize it, and they've successfully done that over the last few years. They've also having revenue streams from both domestic as well as the export outlook from both US as well as Europe. They also are now increasing their share in railways. They also have a joint venture with Titagarh, which is another listed player, as well as increasing their share of EVs because of the aluminum content. So that's something that you should know about the company. In terms of products, very quickly, they do operate in the commercial vehicle space and in the passenger vehicle space largely, and within that it has multiple segments. Within components as well, it offers all these components which are visible on your screens. Forging is one of the major positive aspects which leads to diversification into multiple new products. When you look at the business model of the company, they want to become a one-stop solution. Essentially, these are some of the other key products for designing, forging, machining, as well as assembly. And they've successfully been able to do that, especially over the last 10 years with increasing focus towards US as well as Europe. The other piece is they sell to key OEMs, and these are some of the major ones that they supply to. Of course, with the commercial vehicle space, they do work with someone like Tata Motors as well as Ashok Leyland, but also global giants in the Class 8 truck market as well. When you look at the diversification, auto, railways, oil and gas and other segments are some of the key ones, with auto being one of the key ones because of the size of the industry globally as well. And they've also, in the main competition is likely like Bharat Forge, Forging amongst the key players, and Bharat Forge is the biggest one, and that's largely because it is almost 2 times the size of RK Forging. They have been able to diversify into defense as well for someone like a Bharat Forge, and hence the kind of stability as well as the higher premium in terms of valuation, and we'll just get to that in the end of this segment. But that's largely about the company gaining global market share as well. Very quickly, I want to highlight some 3 to 4 key risks. So that could be the cyclical nature of the industry, as well as higher capex is something that's been bothering this industry for the last couple of years, and with the absence of earnings growth, it's more stark about the cyclical nature of the business. We've also seen intense competition across the players, as well as current problems like inventory overstatement amongst others, something that Harsh highlighted on. That's one of the key aspects. But let's, that's all about RK Forging, and let's, get into the metrics as well.
Yeah, let's, and we'll speak with Naresh Jalan, of course, the managing director at RK Forging shortly. But let's look at the metrics that we look for where RK Forging is concerned. You want to be mindful, again, about all that we've said over the last 10 minutes, because there are certain one-offs and those one-offs aren't fully reflecting on the financials of the past years. FY25, yes, it does. So an offset has happened in FY25. We look at those 4 parameters: income statement, balance sheet, cash flow, return ratios. We look at shareholding, street credit, valuation, street coverage. Cover all of those 8. Puneet, let me get you to start with the income statement.
Well, definitely. And, we've seen over the last few years, it has been able to maintain strong, growth in terms of income statement. And, it's visible from roughly about 2,000 to 300 odd crores.